So let's begin with the first quarter loan loss provisions. We've got that number. Can you give us an outlook in terms of a figure for the loan loss provisions for the full year of 2020?
Thank you very much, and good morning to be on your show. I think the first thing I wanted to say, it's been a busy and a challenging quarter for us during the course of Q1. I think our focus has really been on the resilience of our operation, making sure our employees are safe, they are working from home, making sure our customers, our 39 million customers are well serviced. For example, during the course of the first quarter, we provided over 100,000 of our retail customers with payment holidays to help them get through this difficult time. And we provided over 5.9 billion euros in funding or liquidity to our corporate segments, right? And you're right that this quarter we have seen an increase in our risk costs, not so much in the underlying risk cost of loans that have gone bad or what we call in our industry stage 3, but more because of the more bearish outlook on expected loss that we have added additional stage 2 provisions during this quarter. In terms of outlook for the rest of the year, it's really, and outlook for the rest of the year, I think it's really uncharted territory. I think we're going to have to look at a number of scenarios, whether it's a V-shaped recovery, U-shaped recovery, and then we take our assessment at the end of every quarter. So we're not there to provide a full year guidance on risk costs at this time.
Fine. When might you provide the full year guidance on loan loss provisions?
I think our view is that we provide at the end of every quarter our best assessments of what is coming, right? And I suppose in a way you see now that economic data is coming out for a number of our major home markets during the course of May. We'll take that into assessment and provide, at the end of Q2, what the impact not only of the reduction in GDP, but the impact of the releasing lockdown and the impact of government aid to various different industries. So we take it quarter by quarter.
Tanate, is ING's progressive dividend policy in jeopardy at all?
What we have announced at the end of March is the fact that we have put our dividend policy in suspense. So we don't have a dividend policy per se. What we will do is that we're going to look and see the impact of the current crisis, look at our earning capabilities, and we will come back to the market at the end of Q3, so beginning of October, and provide further insights on our capital outlook as well as our dividend going forward.
Tanate, you talked about some of the measures that you've been taking, particularly for customers during this crisis. But I wonder what kind of financial measures you're also taking to keep the bank afloat. Are you reducing bonuses? Are you pulling any credit lines? Anything else?
Yes. So what I think we want to make sure going into this particular crisis is to make sure that we have resilience. I think resilience in terms of capital ratio. I think you mentioned already that our capital ratio at 14%, it has a cushion of 3.5% over our minimum regulatory requirement. You will see, if you look at the details of our balance sheet, that basically the level of liquidity that we have is actually quite robust. And the fact that I think we have one of the lowest non-performing loan or stage 3 ratios among European banks, I think stand us in good stead going into this particular situation. And it's not really our intention to pull back on loans, but actually provide additional liquidity to our customer base.
All right, interesting. Tanate, meanwhile, though, you have a large exposure to oil and gas. We've seen big moves in the oil price. What actions are you taking in that area of the bank?
We're there to basically support our oil and gas clients as well. And I think we have made sure that we do scenarios on different oil prices to assess how much potential credit impairment there is or potentially will be.
Tanate.
And during the course of Q1, we have decided to take a 41 million euros provision for that portfolio.